This is Nightly Business Report with Tyler Matheson and Sue Herrera.
On the rise, why everything from rates to the price of oil is heading higher. Everything, that is, except stocks.
Cause for concern, companies added the fewest number of workers to their payrolls in more than a year, putting investors on alert ahead of the government's jobs report on Friday.
The whistleblower, meet the man who cracked open the secretive world of Swiss banks, went to jail, and says he would do it all over again. The first of a three-part series starts tonight on Nightly Business Report for Wednesday, May 6th. Good evening, everyone. I'm Sue Herrera.
And I'm Bill Griffith in for Tyler Matheson tonight. By the way, he earlier today spoke to Charles Schwab CEO Walter Bettinger, and we'll bring you part of that interview coming up here in just a few minutes. In the meantime, stocks fell for the second straight day today. The Dow Jones Industrial Average barely clinging to gains for the year overall as bond yields continued to rise for an eighth straight day. Adding to the anxiety, a warning from, of all people, Federal Reserve Chair Janet Yellen about the stock market. That came during a conversation with Christine Lagarde of the IMF.
I guess I would highlight that equity market valuations at this point generally are quite high. Now, they're not so high when you compare the returns on equities to the returns on safe assets like bonds, which are also very low, but there are potential dangers there.
By the close of trading, the Dow Jones Industrial Average dropped by 86 points, closed at 17,841. At one time, it was down almost 200 points. The Nasdaq fell by 19. The S&P shed 9 points. As for the bond market, that yield on the 10-year continued to climb. And Bob Pisani has more on why the stock market is so bothered by those high rates.
Stocks dropped again today, and again traders are having trouble digesting a rise in bond yields. Those yields have been rising for several days, and today 10-year yields rose to their highest level since early March. What's driving this yield rally? Well, first there's commodities, particularly oil, but also copper and other base metals. They've been rising recently. That's fueling inflation worries. Another issue is what's going on with European bonds. German bond yields, for example, have recently gone from 15 or so basis points to 50 basis points, as big bond players like Bill Gross and Jeff Gundlach have been saying German bonds were a big short, the yields. That rapid and violent rise means that other global bond yields, like treasuries, had to respond. There's also been a big unwind of some very successful trades recently. Remember, traders have made a lot of money this year on several positions. First, long the dollar, second, short the euro, third, short oil, and fourth, long European equities, particularly Germany. All this is coming unwound. Today, the dollar was weaker. The euro was at its highest level since February. Oil hit its highest level in a year, and German stocks hit their highs a month ago. They're down 8%. Result, interest rate sensitive groups like utilities, telecom, and REITs all underperformed today. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Also weighing on stocks, a decline in worker productivity in the first quarter and a disappointing report on private sector employment. Private payrolls increased in April, according to ADP, but not by as much as expected. Is it cause for concern? Steve Leisman has more.
A key report that signals health in the jobs market coming in weaker than expected today, raising questions about just how strong the government's jobs report will be on Friday. The private payroll company ADP, which estimates job growth in the nation from activity in the payrolls that it manages, says 169,000 private sector jobs were created in April, below Wall Street's consensus. The big story? ADP estimated that goods-producing jobs, such as in construction, manufacturing, and in the oil sector, lost 1,000 jobs. And there was barely any job creation among big businesses.
If you go back in the early part of the recovery, it was the big guys that were doing really well. The small guys were really struggling, and now things have flipped around. And it's largely because the small guys are tied into the American consumer and into the housing sector.
The weak report raises concerns that Wall Street could be too optimistic for the jobs report Friday from the government. The forecast is for 228,000 jobs for both government and the private sector. Morgan Stanley, after ADP, shaved its forecast, but most economists kept them unchanged. The report Friday will help answer the question whether job growth will weaken along with overall GDP growth.
There is this big discrepancy between employment growth and GDP growth. And if history repeats, what will wind up happening is over time we will see GDP revised higher. It won't look like a boom, it'll be better.
Livornia points out that 2014 was the best year for job growth in 15 years. He says things can't be that bad in the economy if job growth was that good. For Nightly Business Report, I'm Steve Leisman.
Well, the changing interest rate environment was one of the topics being discussed at the nation's biggest gathering of mutual fund executives, hosted by the Investment Company Institute earlier today. Tyler Matheson spoke to Walt Bettinger. He's CEO of Charles Schwab. They talked about whether investors are well positioned for that shift.
Let's talk a little bit about one of the broad changes that I think most people in the business expect is going to happen later this year, and that is slowly rising interest rates. Already this week we've seen the 10-year bond go up above 2.2%. That's a fairly significant move.
It is.
How do you think individual investors are going to react to that? Are they well positioned for that? Are they going to be surprised by the effect of rising rates on, most especially, their bond portfolios?
I don't think they will, in that most of the increase is likely to be at the short end of the curve. Now, if you do get meaningful increases in the long end, and you talked about how the 10-year has moved, that's going to create some NAV or net asset value declines, and you could see people in bond mutual funds and bond ETFs wanting to sell if that occurs. That's probably the biggest issue that sits out there. I'm not sure that history shows that equity markets move a lot on the early increases that the Fed might make. But you could see it if the long end of the curve goes up, people wanting to sell. And of course, what is talked about a lot in the industry is, will there be enough buyers at the point in time that those who want to get out of their bond funds or bond ETFs are ready to sell?
Time will tell.
Time will tell for sure.
Walt Bettinger, thanks very much.
Thank you, Tyler.
Good to see you.
And Tyler will have more from that mutual fund conference tomorrow right here on Nightly Business Report.
Our next guest agrees that we are at a turning point for rates and the stock market. So what should an investor do? John Traynor is the Chief Investment Officer at People's United Bank, $5.5 billion wealth management division. Welcome, John. Nice to have you here.
Thank you. Thank you. Good to be here.
Why don't we pick up where Tyler and his guests left off? Do you feel that most investors have anticipated this pivot point in the market? Because I understand you agree that we are at that point.
What we're seeing right now is almost a replay, a mini replay of what we saw in 2013. We had the taper tantrum in 2013. Then the market backed off. We got a little relaxed in 2014. We're seeing the same thing again. And the question that investors are wrestling with today is the same one in 13. Will the economy be able to grow once the Fed starts raising interest rates? We think it will. We think the economy will continue growing, but that's where we are. That's that inflection point that we're in right now. And for investors, how you answer that question will be critical to how you perform going forward.
How many years, though, John, have we been hearing people say that we are at the end of the bull market for bonds, that yields are going to rise, especially on the long end of the curve, and they've been wrong every single year? We are at 2.25% right now, the high for the year, but are we destined to go much higher, do you think?
Yeah, well, I will first of all, I'll plead the fifth and say that I might have been in that camp also, saying rates were going up, so I'll be honest. But what I believe you're going to see is that the Fed, very different than what we saw with Greenspan and Bernanke when they were raising rates. We think the Fed will raise rates, wait and see what happens, raise rates, see what happens. So it'll be a very slow ramp. So rates will be lower for longer, but the trend will be up.
So, John, give us some advice on where we should put our money. You like some dividend-paying stocks, but you have two picks for us. Let's start with the first one, GE.
Sure. One of the things that we're talking with our clients about is that we're in the 7th year of what has been a very good bull market. So you need to understand we're in the later stages of this market, so you should be focused more on total return rather than capital appreciation. You don't want to be adding a lot of aggressiveness to your portfolio right now. Well, the reason that we like GE is it's got a great dividend. The company is finally focused on what we believe is the better part of their business. They're getting out of the financial services industry, and a lot of the benefit that they accrue from those sales will be returned to investors in share buybacks and dividends. So we're very positive on GE. You've got a good company with a good yield. Okay. It'll serve you well.
Very quickly, John, where would you invest in the fixed income arena?
If you were starting with a portfolio today, The area that we are most concerned about are treasuries. We think treasuries are very expensive. We would agree with the comments from Chairman Yellen. So we're underweighting treasuries. We like good corporates. We actually have, let's say, a 5% position in most portfolios in high yield bonds. High yield bonds have actually held up better than the Barclays Agg during the last couple of weeks. We think high yield, good corporates, and about 25% in treasuries would be a good bond portfolio.
All right, John, thank you. Appreciate it.
Thank you.
John Traynor with People's United Bank.
Great.
Well, they were a great buy when interest rates were low. We're talking about real estate investment trusts, or REITs. They've been on a tear for a few years now, but suddenly a sell-off. Diana Olick examines the move lower, which may in fact be a buying opportunity.
Apartments, offices, retail, publicly traded bundles of these buildings or real estate investment trusts saw tremendous gains over the last few years as investors searched for yield in a low interest rate environment. That's because they offer big dividends, but these so-called REITs are now seeing a sell-off, even on just a slight move higher in rates.
Whenever you have an interest rate sensitive product and people fear that interest rates are going up, it's only natural that those things like REITs, et cetera, are going to sell off.
Stocks of all equity REITs are down 8% in the past month. They had been outperforming the S&P for the past few years, and even in the first quarter of this year offered 4 times the return of the S&P when you include dividends. And REIT fundamentals are actually very solid right now.
If you would go across the different major property types in rental apartments, rents continue to go up above the long-term averages. In retail, retailers are still clamoring for space at malls and shopping centers. And if you look at what's happening in office, rents are actually accelerating in many parts of the country.
Vacancies low, rents rising, and supply still limited. Commercial real estate values are up 11% in the last year. Apartments, self-storage, lodging, and office leading the pack. Names like Boston Properties, Simon, Vornado. They're seeing a sell-off now, but could ultimately be a buying opportunity. Interestingly, we're starting to see a wave of REITs going private, portfolios being bought up by pension funds and sovereign wealth funds. That's because they're earning much more on the buildings than it costs them to finance them. Returns upwards of 9%. That's far more than they'll get from the U.S. or European bond markets. For Nightly Business Report, I'm Diana Olick in Washington.
And to read more about whether or not it is time to get out of REITs, head to our website, nbr.com.
Still ahead, the man who helped bring down Swiss banking secrecy went to jail only to be paid millions by the IRS. His story in the first of a 3-part series is next.
Well, on the heels of Comcast's failed acquisition of Time Warner Cable, all the cable programmers have been gathered at the Internet and Television show to talk about the future of their industry. And many executives said some things that turned heads. Julia Borston was there.
Answering the big question, which deals will come next, Cablevision CEO Jim Dolan proposed to 4 other cable CEOs consolidating the New York market rather than merging companies with no geographic overlap.
The focus has been for big, large companies to get together, right, and to to operate that way. That if we focused on the markets, I think that would bring more to the consumer, and I think it would make the businesses more valuable.
In response, Time Warner Cable's Rob Marcus punted, saying he wasn't sure if he got asked out on a date or to get married, while Charter CEO Tom Rutledge agreed that consolidating makes sense to achieve efficiencies of scale. But not everyone is in a rush to do a deal.
scale never hurts. You know that as you think about scale, you get synergies if you're doing M&A. We talked a lot of M&A activity. I'm understanding it was Jimmy and you just talked about that a little bit. You get some supply chain benefits, but even those things don't guarantee success. It's always about execution. And I think we are the right size with the right opportunities.
But in light of the growing threat of consumers cutting the cable cord in favor of the slew of new digital options, the TV giants here are looking for new technologies to keep consumers hooked and ways to grow negotiating leverage.
Everybody is trying to keep up with the rise in programming costs, and that means you need scale. And so Comcast is already at 20 million plus, DirecTV, AT&T combined will be even larger than that. Charter is still in that smaller than 5 million range, and that means they're going to have to get bigger if they're going to keep pace with the programmers that they're doing deals with.
We'll see if the relationship between Charter and Time Warner Cable gets serious. For Nightly Business Report, I'm Julia Borston in Chicago.
An $8 billion pharmaceutical merger is where we begin tonight's market focus. Alexion Pharmaceuticals is buying Synagiva, paying more than double the market cap for the firm. Synagiva is a maker of rare disease treatments, expanding Alexion's offerings into these types of high-priced medications. Shares of Synagiva soared 112% to $203.39, which in essence means it doubled in market value today. Alexion was off 8% to $155.01. GlaxoSmithKline reported revenue that was in line with estimates, but earnings were short of forecasts. Vaccine and consumer health care were better than expected, but pharmaceuticals were a drag on profits. Despite that, the CEO says the drug maker is well positioned for the future.
Every year for the next 5 years, there'll be 130 million new babies born. That's why we wanted to be the biggest vaccine company in the world. And there's also going to be 300 million people over the next 5 years who become 50 for the first time. That's why we want to have a strong presence in pharmaceuticals and vaccines, which meet the needs of the elderly.
And the shares were a fraction higher to close at $46.02. Phillips 66 hiked its quarterly dividend by 12%. The new payout of 56 cents a share will be paid out in June. The yield is just about 2.5%. Shares were off a fraction to $79.82. It was a tough day for shares of SodaStream. That company said in its earnings report that revenue fell 30% because of lower demand for its sparkling waters. Also, a stronger U.S. dollar weighed on its results. Shares tumbled almost 7% to $17.83.
Still more earnings. Tesla reported a loss that was smaller than expected in its first quarter. The electric car maker's deliveries met expectations. All in all, results did top consensus estimates, while shares popped initially after the bell. Before the close, though, the stock was down about 1% at $230.43. Whole Foods delivered earnings that were in line, but revenue did miss. Same-store sales came in below consensus as well. That grocery store chain said in the report that it is launching a new store concept with locations to begin opening sometime next year. Shares dropped after the bell. During the regular session, though, trading was up a fraction at $47.72. Also out after the bell tonight, results from 21st Century Fox. Earnings were much better than expected, but revenue came up short of estimates by a bit. Sounds familiar? Shares were a little changed in initial after-hours trading. At the close, though, shares were off a few cents to $33.03.
As an American working at UBS in Switzerland, Bradley Birkenfeld held the keys to dozens of undeclared bank accounts and enough information to crack open the confidential relationship between Swiss bankers and U.S. tax evaders. He blew the whistle on the conspiracy. He went to prison for his part in the scheme, and eventually he received a record $104 million from the IRS for coming forward. He gave his first interview about his roller coaster ride of the past several years to Eamon Javers, who has the first of a three-part whistleblower series.
So was it worth it at the end of the day?
Oh, I'd do it all over again.
You do jail again?
Yeah, sure.
Lose your career?
Absolutely.
104 million is a lot of money.
It is a lot of money, but it's having the courage to come forward and do something so historic. No one ever came forward and talked about Swiss bank secrecy, ever.
Boston native Bradley Birkenfeld says he became intrigued by international banking while working in finance in Massachusetts, but he never expected to become embroiled in the biggest tax evasion scandal in history. He moved to Switzerland in 1994 to earn his MBA and settled in Geneva, where he managed to get a job first at Credit Suisse, then Barclays, and finally UBS, one of few Americans allowed into the mysterious world of Swiss banking.
It was obviously highly restricted to only people who worked there, so we had access through secure IDs to get into the floors that we were working on. It was a very tight work environment.
The way he describes it, the job sounds like part personal assistant, part spy, complete with encrypted computers and underground vaults filled with untold riches.
Bars of gold.
Physical, yes, absolutely, or platinum. Very rare coins that they would put in there, or actual cash, physical cash.
And who was hiding these treasure troves? Birkenfeld says the UBS client list included many of America's most powerful and wealthy families.
You had doctors, lawyers, politicians, CEOs, dictators.
Hollywood?
Hollywood as well. Hollywood stars had accounts there as well.
And Birkenfeld admits there were blatant banking violations. For example, he claims as a Swiss banker, he was required to take trips to the United States to meet with clients and hunt for new ones at extravagant parties and events like Art Basel in Miami.
The problem with this was that it was the U.S. portion of the bank that was actually organizing these events for the U.S. market.
You weren't a licensed banker in the United States.
We were not SEC registered, and we were not licensed to give investment advice, so that was clearly a violation.
And while he says UBS taught bankers to do business this way, a colleague discovered a hidden internal memo that stated those types of practices were prohibited.
The stuff about how to break the law, they're training you on. And then the memo about how to follow the law is buried in the internet somewhere?
That's right.
And no one trains you on it?
No.
A spokeswoman for UBS told us the business described has been closed since July 2008. UBS today is a different firm with a different strategic focus and senior management team. Still, Birkenfeld showed me the memo that first got his attention.
And this is what made you decide to become a whistleblower?
That is correct.
Because you thought they were going to throw you under the bus?
Myself and my colleagues and the clients and the shareholders.
And so you threw them under the bus?
That is correct.
Guys, Brad Birkenfeld did end up throwing UBS under the bus. It cost UBS an enormous amount of money, and it also changed the future of bank secrecy in Switzerland, and you could argue around the world. Tomorrow night, I'll tell you how he did that and how he managed to get rich along the way. Back to you.
I can't wait, Eamon. Terrific, terrific stuff. Thank you so much. And to read more about the UBS whistleblower, head to our website, nbr.com.
Great story. Coming up, why the first self-driving vehicle you see on the road might have 18 wheels.
Here's what to watch tomorrow. Initial jobless claims will give us a read on the labor market ahead of Friday's big jobs report. And we'll hear from Chicago Federal Reserve President Charles Evans, who will offer his take on economic conditions and monetary policy. That's what's on the agenda for Thursday.
In the meantime, California has now officially adopted those historic water restrictions that were announced last month by Governor Jerry Brown. State regulators there have approved a plan that would cut the water used by cities and towns by 25%.
The Federal Aviation Administration will test commercial drones that can fly beyond an operator's line of sight. The agency is teaming up with drone maker Precision Hawk and BNSF Railway, which will use those drones to inspect rail infrastructure. The move is seen as a precursor to some drone operations like package delivery.
And finally tonight, from the sky to the roads, one of the largest manufacturers of commercial trucks is rolling out a self-driving semi, believe it or not. Freightliner says that autonomous driver trucks will be a safer and smarter way to haul goods on the highway. Phil LeBeau has more tonight.
It looks like any other semi, but this Freightliner truck could revolutionize the way trucking companies operate. It is a semi-autonomous drive truck that controls steering, acceleration, and braking on the highway, freeing up truck drivers to do less actual driving.
The truck driver is still in charge, so he sits at his seat, but basically does the monitoring of the whole truck and the traffic just as much as a pilot would do that. But the systems basically take over and do the everyday steering for the many long hours on end in those trucks.
Freightliner's self-driving semi is licensed in Nevada, the first state to okay an autonomous drive truck. For other states, allowing these trucks on highways will take some time. The primary concern will be safety. Approximately 4,000 people were killed in trucking-related accidents last year, and the number of fatalities is rising as the economy improves and more goods are hauled on highways. It will likely be several years before we see large numbers of self-driving semis on American roads. And when it happens, you'll still see drivers in the cab. But increasingly, especially on those long-haul routes, the trucks will be driving themselves. Phil LeBeau, Nightly Business Report, Atlanta.
So if that's the case, then if the trucks drive themselves, are you still called a truck driver? I guess he answered that. You're a pilot now.
You're a pilot. You're a truck pilot.
A truck pilot.
That's what you are.
All
well,
right.
We'll see. I don't know. I still think it would kind of freak me out if I drove past and I didn't see the guy driving the truck. But we'll see.
with you. But hey, it's technology. It's the future.
It's the future. That'll do it for Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening, everybody. See you tomorrow.